What is up, ladies and gentlemen? In the last 200 years, 90% of all millionaires have come from real estate or are invested in real estate. And out of all of the millionaires in the world, the USA has the highest number with 39%. So, statistically speaking, perhaps the best bet at becoming wealthy is to invest in real estate. So today we'll be taking a look at my best pick of a US property company that you can invest in for 100 Rand or less. And by the end of this episode, we'll be buying shares in that company live and in real time. So stay tuned and let's get started. Good morning or evening, depending on when you're watching this. Now, we talked about some statistics there. It seems as though 90% of the world's millionaires over the last 200 years were made from property, and that of the total US dollar millionaires in the world, 39% of those, being the most of any country ahead of China's 11%, are from the United States. Now, does that automatically mean that your best chance of becoming a millionaire is to invest in property? Maybe, but also maybe not. In the last 10 years, the highest growth companies have been in the technology sector. But also since January 2022, tech stocks have been some of the biggest share price drops as demand for online sites comes down from the highs of lockdown and COVID, and tech companies that often have large amounts of debt because they need it to meet their high growth targets will be hit hard by rising interest rates this year. So just take a look at the Nasdaq 100 Technology Sector Index, which has lost 40% of its total value since January, which is double the loss of the S&P 500 of 20%. But somewhere in between those two, we have the US property indexes, which are down typically between 25 to 30% on average. So, what exactly are we getting at here? Well, like we've said before, while the markets are down, it's a good time to continue to invest and to add to your portfolio. And right now, property stocks are at an interesting place where they are showing a better hold of their value than some other stocks. But also because of the drop in share price in these markets, their dividends are at higher levels as well. So let's get right to it. Right now we have around 152,000 Rand invested in our South African portion of our Easy Equities account, but we only have around 13,000 Rand in our UK account and around 13,000 in our USA account. So in the recent months, I've been looking to increase my offshore diversification and exposure by buying into pound sterling and US dollar assets. And today we're looking at a really nice US property stock that I think has good long-term share growth and dividend income potential. So today we're going to be looking at the US property company called Simon Property Group. So we're going to have a look at the company, why we think it's a good buy, and at the end of the video we'll be buying shares in it live and in real time. Okay, so let's make it simple. Simon Property Group is an American real estate investment trust that started in 1960 by brothers Melvin and Herbert Simon and is based mostly in retail property. That means they invest in shopping malls, outlet centers, and lifestyle centers, and they are the largest owner of shopping malls in the United States, with interest in 232 properties in the US and worldwide. Now, I first came across this company in an article published last month called 8 of the Highest Yielding Equity REITs on Yahoo Finance, and then again in one of Graham Stephan's videos as a good passive income stock. But I decided to dive deeper, so let's take a look at what I found. First of all, let's look at the trustee share price graph. You can see here that since listing in 1997, their share price has grown by 965% at its peak before leveling out a bit, and then of course there was coronavirus and now the recessionary pricing that we've been seeing this year in 2022. So that leads us to two things here, and the first is that at this price it is on a price to earnings ratio of 16, which is better than the overall average of its competitors of 25. And with a PE ratio, the lower the number, the more value there is in the share price when compared to its income. Then we look at the dividend income, which is currently paid quarterly or every 3 months. So right now the dividends are at about 6.5% a year, but let's look at that quickly. Historically, the dividend percentages have been around 2 to 4% a year, and in 2019 they were paying around $2 quarterly per share. Then after COVID, they were paying around $1.70, but that's actually quite important, so keep that figure in mind and let's look here. Now, what you're looking at is Simon Property Group's net income. That is what these yellow lines are here. So the net income is the income minus expenses, so it's almost like your profit. And the dividends of real estate trusts around the world are typically paid out as a percentage of their net income. So what you might notice is that their net income for 2019 was $2.1 billion. But in 2021, it was $2.25 billion. What that indicates to me is that there may be room in time for some dividend growth, and at 6.5% already to begin with, it's looking to be a possible good return of value in the next few years. Then their balance sheet has slightly grown its assets by $740 million from 2020 to 2021, and at a debt-to-equity ratio of about 7%, there's limited exposure to the interest rate increases on their debt repayments. So from a 2019 share price of about $150, it still has some ceiling room to catch up to this point at its current $100 price. And with revenues reaching those 2019 levels, it might have room to rise towards it as the market eases up in the longer term. And that's about it. So while no one has a crystal ball, it does look like this share has a pretty good store of value and good long-term potential for dividend income. So we're going to head into Easy Equities. Go to Invest Now, search for them, and we will be buying $247 or around 4,400 Rand in Simon Property Group. So since this purchase, we also made 2 additional top-up purchases. And as of now, which is about a week after our first purchase, our total share growth is at 7.94%, with varying growth between the 3 purchases, as you can see here as we dollar cost average into the purchases. So just an update on our stash portfolio quickly. We are using the Stash app by Liberty to dollar cost average into the JSE Top 40 during these down markets to make larger than normal profits when the markets come back up. The Stash app, once you download and sign up, will stash money every single day automatically into the JSE Top 40, totally tax-free, allowing you to dollar cost average into the market without any effort, and any dividends get added to your account. We are automatically putting away 5 Rand a day or 150 Rand a month, and right now we are at 66 Rand and slowly growing. So it's a helpful app, and if you download it from the App Store and use our referral code, it helps out the channel. But also, what's quite cool, once you're using Stash, you can refer 10 friends of your own, and you get 10 Rand each added to your investments if they use it. So, I mean, that is free money, which is always great. And guys, that is it for today's video, where we bought and added shares in Simon Property Group to our USA Easy Equities account, both increasing our stock holding and our dividend income for our portfolio. I hope that you enjoyed it, and if you did, please leave a like on the video and consider subscribing if you haven't already. It's free, so why not? But until then, I'll see you guys next time, as always, on Casual Cash. Cheers.